Welcome to PwC's 2015 Annual Report. I have Pauline Campbell with me, Chair of the Audit and Risk Committee and Supervisory Board member, who's going to talk us through both the Supervisory Board and also the Audit and Risk Committee. So tell me about the Supervisory Board. What exactly is its role?
So the Supervisory Board has two main roles. The first is to oversee the Executive Board on behalf of the partners, to hold to account, if you like. The second role is representative, because we are all partners, so we represent the views of the partners to the Executive Board. Through formal and informal meetings, we can take the views of the partners to the Executive Board when they're making their decisions.
So who's on the Supervisory Board, Pauline?
So there are 12 elected partner members. Ian Powell, our senior partner, sits on the board. There are 2 members of the Global Board of PwC International who also sit on the UK Supervisory Board. We normally sit for a term of 4 years, and this year there's been a lot of change because there were 5 new elected members in January.
And what about the day-to-day responsibilities? What does the Supervisory Board do?
So it's obviously quite a wide remit. For certain things we approve decisions, things like admission, retirement of partners. For certain things we look at what the Executive Board is doing and how they've come to the decisions in terms of an oversight role. There's also key things that are scheduled for consideration by the Supervisory Board, such as election of a senior partner, which is coming up in 2016. And then if the firm does anything that changes the direction or nature of the business, the Supervisory Board makes a decision as to whether we put a vote to the partners in terms of getting the partners authority for the Executive Board to make those decisions.
And how does the Supervisory Board operate?
Yes, so the Supervisory Board operates by considering the activity of other committees, for example, the Public Interest Body. The Chairman of our Supervisory Board, Mark Hudson, sits on the Public Interest Body with me and a number of people from outside the firm who provide advice to the Executive Board and the Supervisory Board around governance and certain of the issues that we've already discussed. Then the main work of the board is carried out in 3 committees. The first committee is the Partner Affairs Committee, which looks at partner admissions, retirements, and things like partner income. The second committee is the Strategy and Governance, who will consider what things should we as a Supervisory Board be looking at, what needs governing. And again, examples like acquisitions, unusual transactions, and how we perform against those fall under the Strategy and Governance Committee. And then finally, the committee of which I am chair, which is the Audit and Risk Committee, which does the things that an Audit and Risk Committee will do, looks at the firm's risk management, its controls and policies, what the internal audit does, and holds a relationship with the external auditors as well.
You're the chair of the Audit and Risk Committee. Can you give me some more detail on how it provides oversight?
So the Audit and Risk Committee is a selection of partners from the Supervisory Board, and we've made sure that we've both got audit partners and non-audit partners on the committee, because obviously, as I say, it's representative as well as supervisory. And we carry out the normal duties of an Audit and Risk Committee. We met 10 times last year. The agenda splits roughly into the matters that an audit committee would consider: internal audit, external audit, and reporting. And then the matters that are risk committee matters, which is looking at how the firm manages its risk, how the firm identifies its risks, and how it monitors its risks.
So you cover the same responsibilities as a public company audit committee?
Absolutely. We do everything a public company audit committee would do. I would add that we are elected partners, so we are also representative. We do have some insight into the business that perhaps a public company non-exec would not have, which I think is very valuable in our role.
And can you tell us a bit more about the internal controls and the risk management responsibilities that reside with the Audit and Risk Committee?
First of all, we look at the policies and procedures of the firm. How does the firm identify its risks? We then ask ourselves, what is it we want the firm to look at, and how will the firm consider controlling those risks? That drives the internal audit plan by looking at where we want to have assurance. Then what happens is one of our members, Caroline Roxburgh, sits on the Risk Council, which is the council the firm uses to identify the risks in the business, how they will control those risks, and who's responsible. Again, that's fabulous insight for us on the committee. The external auditors finally look at the risk function as part of their external audit and report back to us on whether the risks are controlled the way they would expect the risks to be controlled from an external point of view. Finally, the firm has a huge compliance burden, and ethics is obviously very important to us. That also falls under the Audit and Risk Committee. We consider what the firm's policies and procedures are and how those are being operated. So, for example, we get a regular report on the Speak Up helpline that's available to all employees.
And what about financial reporting?
Yes, that's a very important part of what we do. We keep abreast of accounting developments and changes and how the firm is going to respond to those changes. We then look at the internal audit and external audit's view of how we are responding to those changes in areas such as internal control, critical accounting, estimates and judgments.
Can you say a bit more about some of the examples around the critical accounting judgments and estimates?
Things such as revenue recognition. So, for example, some of the firm's revenue will not be billed at the end of the year, and the question is, should the firm take that into account or not? We consider what management is doing and how they are applying their judgments. Secondly, areas such as impairment and valuation of goodwill. That involves a number of estimates and judgments, such as discount rates and growth rates. Again, we consider how management have come to their judgments. We'll then ask the external auditors what their view is of management's judgment, and then we'll form our own opinion as to whether we think it's acceptable, which for this year's annual report we definitely do.
You mentioned the external auditors. How do you manage the relationship?
We manage that by making sure that we are in regular contact with the partner of CCW. I meet regularly during the year. It's important that we establish what the external auditor wants to do, whether they're getting the cooperation from management and whether they have the ability to carry out an effective, high-quality audit. I meet regularly with the external auditor during the year. I think part of an effective audit committee is to make sure you understand what you think the auditors are going to do, and then ultimately the external auditors attend all of the audit committee meetings that are relevant to them.
And what about quality? I know quality is vital, I guess, in your assessment.
Yeah, it's a huge issue. We have a formal process of assessing quality, which is to issue a questionnaire to everyone who comes in contact with the external auditors. That's management, it may be the finance function, or people in the lines of service. And then we also ask the audit committee what their experience has been of their interaction with the external auditors. And we get answers. Generally, we're very happy with the quality. There's sometimes some areas for improvement, as there are with everything, and we give feedback to the external auditors. And I've been delighted by their response, where we've maybe improved the communication and some of the areas of working which has worked really well.
What about the reappointment of auditors?
Well, quality is the first factor that we look at in considering reappointment. Then we look at the tenure of the audit partner. There was recently been a partner rotation. So at this point, we're very happy to continue to reappoint CCW.
Any final thoughts, Pauline?
Yes, I think the Audit and Risk Committee carries out, in my view, everything that an Audit and Risk Committee should carry out. It's a very important job and becoming increasingly important. And I'm confident that PwC's Audit Committee would stand up to the same scrutiny as that of a public company. And the matters that we've covered today are the matters that exactly should be covered in an annual report.
Thank you very much, Pauline.
Thank you. You're welcome.
Thank you.